Okay, in this video we'll talk about my second favorite. Actually, some people think this is the most important indicator besides the volume profile. This is substantial attraction levels. These are embedded volumes inside the market that you don't see unless you have specific indicators and data feed and platform. For example, many people use market depth, order flow, and also softwares like Jigsaw, etc. to show you the embedded volume. I have something better because what I'm using is an indicator that actually gives you historical embedded volume in the market plus the immediate. If you use immediate, you will see the price, these embedded volume levels around the price. You don't see something historical, something far. Let me show you. Like for example, the Nasdaq here has been showing a traction level for 3 days now, 4 days, okay, in this area, right? So you don't see it unless you have historical market depth and a data feed that gives you historical, of course, market depth as well. And the actual indicator. Now let me explain the indicator in a simpler term. Going back to the crude, in this chart, this is the daily chart. I have put only, this is the substantial attraction levels. I only put one attraction level, which will read, I can go up to 50. So, but if I put one, meaning the biggest hidden volume right now by anybody, it could be a market maker, could be a broker, could be a bank, it's actually sitting here. Okay, which means if I'm intending to short the market right now, I would rather wait for the market, for the price to get to this price. It is a very important, this is 40-50 ticks difference. If I want to capitalize on a better entry shorting, I would rather wait for this price. Now I put more on a 60-minute chart. On a 60-minute chart, for example, to see smaller frames and more immediate embedded volume. This embedded volume will attract the market, the price to it. Now, it could react as a support and resistance as well. For example, we just noticed that the market basically, the price basically bounced from here. You see, there's a reason for this, which is the embedded volume, right? But it also acts like attraction. Now, this could be spoofing. We don't know. Regardless, the market, the price is attracted to these levels. And this is how it works. You can basically go to the studies, go to the substantial attraction level. You can put 10, 15, 20, up to 50. You can put up to 50 levels. This is 50. You see, I have a lot, but you know, I don't want to get it busy. So I put, let's say, let's go with 10 in this case. Apply. You can choose the thickest ones, the biggest ones to be thicker, up to 10. You can do up to 10 thickness. So now I have the bigger, the thicker the market. Also, you can also basically have it shaded, the thicker, the bigger, the darker. So the lower one, the lower color, make it white. So now it will shade, the shading will differ. See that? Now the lighter colors refer to less volume amongst the 10, amongst the biggest 10. So if I mark the biggest one here, if I mark it as a line, I'm expecting the price to come to it before the crude decides something. As you see, I marked it. This is the biggest level, and I have it here in the 60-minute chart, and let's see and wait and see. Now these levels are key, and that's exactly what happened. Just for you to see, this was really a given because the SAL indicator showed us that it is coming up, and now I think there is a kind of a rejection area here that might hold. Now see, now it showed up. Do you see the level showing up here? Showed up briefly, but right now the actual main embedded size, biggest size is here. You see, and see the SAL indicator showed up indicating some kind of rejection. So if I mark this level here, the lowest one. Let's see if we have a legit, or not a legit, I would say a short that will give us at least this target and maybe below. So there you have it, exactly like anticipated. Of course, the trade was kind of random because it was just a demo short showing you that the target, there's a big chance for the target to hit. We don't trade like that. We have to anticipate the levels. We would have possibly entered in the higher level, maybe even higher if it's gone there. But again, that was just a demo example to show you how these levels will attract the price back to them.